Stephanie, just in general, you seem a little bit, not defensive, but you like the dividend plays at this point. Is that a reflection of not being as bullish about the recent challenge to the new highs that we've seen with the markets? Do you think we're getting close to full value?
Well, we like the dividend plays because quality stocks in the long term are going to do better, but given where fixed income rates have gone, we think investors are going to be clamoring for yield, and these dividend plays have some of the higher yields out there. In addition, just with all the volatility out there, we think that these type of names can provide downside protection to the market, and so we're big believers in dividend payers that can grow their dividends over time. Always, or just now in the interest rate environment we find ourselves in right now? How long has this been a thesis for you? We've actually had this since post-crisis. Back then, yields were going lower quite a bit. We backed off the higher dividend names for a while, but now we're quite constructive on those names, just given that yields are going quite lower again. No international exposure or minimizing international exposure, for what reason? Well, we still have some international exposure, but we've been underweight really since last September. What we were concerned about is that we're in a global slowdown. It started last April or May, and it's really gone prolonged. We were thinking we might have seen a bottoming a couple months ago, but really with Trump putting on the additional tariffs, we're concerned that that's going to be prolonged there, and we've had quite a bit of negative momentum. So therefore, we've been underweight on the international side. Kevin, I really, not thinking, I almost did say JJ. We got this guy Kinahan on all the time, and he used to be Joe, but now he's J. I mean, if anyone should be JJ, it should be you, JJ Giddis from Chinatown, obviously.
I think so, Joe.
But it's not, and I've said that a million times. Now, there's a movie, Sorkin. Have you seen that? Best Picture? I mean, Chinatown?
Yeah, oh, yeah.
Oh, yeah, okay. Now, there's a movie. I'm talking about compared to Murder Mystery. Oh my God. Now, and that was there was a mystery in China. Anyway.
It was free. You didn't pay anything for it.
For Chinatown?
No, for...
Which time?
For Murder Mystery.
Oh, for Murder Mystery. Yeah, that's what it was worth.
Good things aren't free.
in
the time that it
exactly. I want my time back. Does that make sense, JJ, did what Stephanie just said about why to invest in dividend stocks because of the environment we find in fixed income? Do you see that? Are we headed lower from here? Rates?
Yeah, and I tend to agree with what Stephanie said. So in a more traditional fixed income play, the reach for yield has been going on for quite some time, and it's not new. It's just enhanced now. So you have to look away from, traditional treasuries and agencies and go on further into, the corporate market is probably a good market in the intermediate sector. The tax-free municipal market out longer, where you're getting 80, 90, 100% of taxable yields as a pure muni yield, so it doesn't matter what tax bracket you're in. And then if you want to reach a little bit, leveraged ETFs in muni funds gives you a little bit more yield than you would get, but it also takes on a little bit more leverage risk. So it's the same theme, but I think it's more enhanced now since rates have fallen quite a bit in the last 6 months.
Do you think Jay Powell made any news yesterday? And we've talked many times about whether, policymakers can ever completely separate themselves from what we all feel about things, whether they're still human. And for him to say, I'm not going to respond to this political side, I'm going to do what I need to do. And, it's almost, he's not immune to reacting to the onslaught from President Trump. And to me, it just seemed like he was sort of standing up for his independence, and I may cut rates, but it's not going to be because of political pressure. It's going to be because I've seen enough evidence that the economy is slow. Were you surprised by what he said?
Not really at all. I thought that what he's doing now is building consensus, both for the market and for the rest of the Fed. I wasn't surprised that there was some dissension. I do think that he would like to, for the Fed's point of view, do it on their terms versus on the market's terms or what the White House wants. So I think this is kind of a slow mover on its way to July, and 25 basis points is probably pretty much in the books. He just needs to build up to it.
As a watcher over the years, Kevin, have you ever really seen the Fed anticipate correctly what the economy was going to do and actually preempt either, a weakening or an overheating. I don't. It's better that they just do things after things happen, it seems like, because they have no idea, usually.
Yeah, they've kind of missed the call for a long time on inflation, and I think that's what hurts the Fed more than just economic growth. What they're trying to do now is sustain the economic recovery and still try to hold out hope for some inflation in the future. So I think that they've missed that for a while. It's kind of why they're in the boat they're in now, and that if they'll just focus on trying to keep the economy going, let the rest of it fall into line, and they'll be able to react to it in time.
Stephanie, just we'll finish up, and this is a fixed income question. How long do you think we're going to be in this position? I'm thinking of retired people and everybody else that's anybody who's trying to live on fixed income. Are we just stuck here below 3 or 4% for the next decade?
I think low rates are here to stay for quite a while. You've seen the 10-year go quite lower. You look at the $13 trillion in negative yields globally. I think there's going to be further pressure on the short end with the Fed cutting rates. So unfortunately, yes, it is a tough spot for retirees. And that's why a lot of them are forced to go into riskier assets like the dividend-paying stocks.